A new tax law could save you thousands in retirement, but you've got just 4 years to act. Stick with me to learn how to protect your savings. All right, let's have a friendly chat about this new tax law that's got everyone talking, especially if you're over 65. It's a big deal for retirees, and I want to make sure you're in the know. This law brings some fantastic opportunities to keep more of your hard-earned money, but some of these benefits are like a limited time offer. They're only here from 2025 to 2028. So grab a cup of coffee and let's dive into what's new and how you can make it work for you. First off, the lower tax brackets and higher standard deductions are here to stay permanently. That's a huge relief, right? No more worrying about tax rates spiking after 2025. For example, the 12% bracket won't jump to 15%, and the 22% bracket won't hit 25%. Plus, the standard deduction, that chunk of income you can earn tax-free, is getting a nice boost in 2025. Married couples filing jointly will get $31,500, while single filers get $15,750. If you're over 65, you can tack on an extra $1,600 per spouse for joint filers, or $2,000 for singles. So, if you and your spouse are both over 65, your standard deduction could hit $34,700 in 2025. That's $34,700 of income completely free from federal taxes before any other deductions kick in. But here's where it gets really exciting. There's a brand new senior bonus deduction just for folks over 65. It's an extra $6,000 per person, so a married couple could get up to $12,000 more. Whether you itemize or take the standard deduction, this bonus stacks on top. For a married couple over 65, that could mean a total deduction of $46,700 in 2025. Imagine shielding nearly $47,000 of your income from taxes. But there's a catch. This senior bonus starts to phase out if your income goes over $75,000 for singles or $150,000 for joint filers, dropping by 6 cents for every dollar above that. And here's the big one. It's only available from 2025 to 2028. After that, it disappears. Are you thinking about how to use this yet? Now let's talk about why this is such a golden opportunity. Taxes can eat away at your retirement savings, especially when you're living off Social Security, pensions, or investments. These new deductions give you a chance to lower your taxable income, which means more money for the things you love, like travel, grandkids, or just peace of mind. But with only 4 years for that senior bonus, you've got to plan smart. Let me share a quick example. Say you're a retired couple with $100,000 in annual income. With the standard deduction and senior bonus, only about $53,300 might be taxable. That could keep you in the 12% tax bracket instead of 22%, saving you thousands each year. Pretty great, right? Another thing to consider is how this law fits with your overall retirement plan. Are you relying heavily on a 401k or traditional IRA? Those withdrawals are taxed as income, so higher deductions now could help you pull out money strategically without a big tax hit. Or maybe you've got a mix of income sources, Social Security, a pension, maybe some rental income. Each piece affects your taxes differently, so understanding your full financial picture is key. For instance, Social Security benefits might be partially taxable depending on your income, but these deductions can help reduce that. And if you're in a high-cost state like California or New York, the temporary boost to the SALT, state and local tax deduction, could be a bonus, letting you deduct more of those property taxes. But like the senior bonus, that SALT boost ends in 2028 too, so don't sleep on it. Here's another angle. This window is perfect for rethinking your investment strategy. Maybe you've been holding off on selling some stocks because of capital gains taxes. With these deductions, you could sell now, pay less tax, and reinvest for better diversification. Or perhaps you're considering a big charitable gift. Pairing that with the new deductions could amplify your tax savings. The point is, this 4-year window is like a tax holiday for retirees, but it takes a bit of planning to maximize it. Don't worry if this feels overwhelming. You don't need to do it alone. A quick chat with a financial advisor can help you map out what's best for you. No advisor? No problem. Just start by jotting down your income sources and deductions to get a clearer picture. Stick around, because I'm about to share some simple steps to turn this into action. So how do you make the most of this tax law? Let's go through 4 easy steps to get you started. First, figure out your taxable income. Take your total income, think Social Security, pensions, investment earnings, and subtract things like contributions to an HSA or traditional IRA. That gives you your adjusted gross income, or AGI. Then, subtract either your itemized deductions or the standard deduction, whichever's bigger. What's left is your taxable income, the amount the IRS actually taxes. Knowing this number helps you see how much these new deductions can save you. Second, consider Roth conversions. With the higher standard deduction and that senior bonus, you can convert more of your traditional IRA to a Roth IRA without jumping into a higher tax bracket. Why is that a big deal? Roth withdrawals are tax-free in retirement, so you could save a bundle on taxes down the road. The next 4 years are the perfect time to do this, especially while deductions are high. Have you thought about Roth conversions before? Third, if you've got investments in a taxable brokerage account, this is a great time to harvest some gains. Selling appreciated investments now, while deductions are higher, could mean paying little or no tax on those gains. Plus, it resets your cost basis, which can make future tax planning easier. It's like giving your portfolio a fresh start. Fourth, think about smoothing out withdrawals from accounts like a traditional IRA or 401k. By taking money out strategically now, you can keep your income lower and avoid big tax hits when required minimum distributions, RMDs, start later. This is especially helpful if you're nearing 73, when RMDs kick in. It's like setting up your future self for a smoother ride. You've worked hard to build your retirement, and this tax law is like a gift to help you keep more of it. But with that 2028 deadline looming, now's the time to act. Don't let these deductions pass you by. Take a moment today to review your finances and make a plan for the next 4 years. You've got this. If you found this helpful, hit that subscribe button for more tips on Social Security, retirement, and tax changes tailored for seniors. I'll be back with more ways to help you thrive in retirement. See you next time.